Okay, let's dive right into this. Welcome everyone to today's Explainer. We are looking at something today that honestly has the power to completely transform your approach to the markets. We're unpacking the core methodology behind the Trader's Discipline Journal. If you've ever felt like your trading is just a total roller coaster of emotions, or if you're really struggling to turn those sporadic, random wins into actual long-term consistency, well, you are in the exact right place. We're going to look at how to literally strip the gambling mindset out of your routine and replace it with unbreakable, professional habits. Here's our chronological roadmap for today. Think of it as our pre-market context. We'll hit 1, the problem with most traders, 2, establishing your trading rules, 3, passing the discipline gate, 4, execution and net profit, 5, the 10-trade checkpoint, and finally 6, the 100-trade transformation. All right, let's get started. Section 1. The problem with most traders.
Listen to this and seriously let it really sink in. The goal is not to be right. The goal is to make disciplined decisions repeatedly. This is the absolute fundamental mindset shift you need to survive in the markets. I mean, human nature just screams at us to predict the future, right? To be right about the very next tick on the chart. But the source material makes it incredibly clear. Winning a single trade means absolutely nothing if the habit behind it is totally flawed.
Now, what's really interesting about this comparison is the stark contrast between amateurs and professionals. Amateurs are endlessly out there searching for the perfect strategy, that magic indicator or the absolutely flawless setup. It's what most traders waste their time looking for. Professionals, on the other hand, they build a shield of perfect discipline, which is what successful traders actually focus on. Basically, the amateur wants a crystal ball, but the professional just wants structure. The Trader's Discipline Journal provides the ultimate structural solution for this. It isn't just some random notepad. It's a physical system specifically designed to force you into that professional mindset. By committing to track 100 trades systematically, you're taking this really abstract concept of discipline and making it a concrete, trackable reality that actively protects your capital.
Moving on to Section 2, establishing your trading rules.
So, this is step 1 of the journal's workflow, and it happens way before the market even opens. Because think about it, you can't measure discipline if you don't have actual boundaries to measure it against. These are the foundational rules outlined in the text. It all kicks off with Rule 0, never trade money you cannot afford to lose. No journal on earth can fix that mistake. From there, you write down your strategy and your setups exactly once. You firmly define your max risk per trade and your max daily loss. And finally, you establish your pre-market context, the news, your bias, your key levels. The crucial takeaway here is this. Under the system, if you don't have written rules, you are literally not allowed to make any trades. I absolutely love the tough love in this statement from the journal. A trader without context is a gambler with a terminal. Honestly, if you're just sitting there reacting to flashing red and green lights on a screen without having filled out your pre-market plan, you're not operating a trading business. You're just sitting at a really, really stressful slot machine. Which brings us to Section 3, passing the discipline gate. Let's see how this builds, because this is the real heart of the system. Once your rules are set, every single trade you even think about taking must pass through this critical threshold before you ever click buy or sell. The discipline gate acts as an ironclad defense mechanism, forcing you to check 4 very specific boxes. 1. Does this actually fit the strategy I wrote down? 2. Is my stop loss physically set in the system? 3. Am I completely free from revenge trading or FOMO, the fear of missing out? And 4. Is my position size double-checked? This right here is your mandatory pre-flight checklist. So, pause for a second and picture this. You're looking at a setup. It looks amazing. The momentum is totally there. But your stop loss isn't perfectly defined, or maybe you're just a little bit tilted from a loss you took an hour ago. What happens if even one of those 4 boxes cannot be ticked honestly? You skip the trade, period. As the source material so powerfully states, missing a trade costs nothing. Breaking discipline costs everything. That is the ultimate mantra of the discipline gate. Its entire purpose is to ruthlessly eliminate emotional trading before it even happens. Because if you can't articulate exactly why you're taking a trade based on your rules, well, you don't actually have a trade. You just have an urge. All right, Section 4. Execution and net profit. And this brilliantly illustrates what happens next. Once you pass the gate and actually take the trade, we enter the post-trade phase. This is where we confront the harsh, mathematical realities of market execution, a reality that amateur traders almost completely ignore. You've got your gross profit and loss, sure, that's what everyone looks at. But then you have your charges. Commissions, fees, slippage. A trade might be a win, but your actual net is lower. Or worse, another trade might be a loss, but your net loss is significantly worse than your gross loss simply because of those charges. The system practically forces you to track net P&L because, as the journal notes, the market charges rent whether you win or lose. By tracking the actual post-charges outcome of every single row of execution, you completely ground your trading in reality. This level of visibility makes discipline even more vital, right? Because you suddenly realize that simply breaking even on a trade, that's actually a loss once the market takes its cut.
Section 5. The 10-trade checkpoint.
Trading can be incredibly isolating, and it's just so easy to fall into a downward spiral without even realizing it's happening. So this number right here is your built-in circuit breaker, 10. After every 10 trades, the system forces you to just stop. You literally cannot take trade number 11 until you sit down, review the last block of 10 trades, and score your own discipline on a scale of 1 to 10. A 1 is trading like you're at a casino, and a 10 means you followed absolutely every rule. So at this checkpoint, you track these key metrics. You calculate your actual win rate, you pinpoint the specific rule you broke the most often, but honestly, most importantly, you count exactly how many of those 10 trades actually followed your plan. The source material reveals such a profound truth here. Your true edge as a trader lives in that specific ratio, the number of trades that followed the plan, and not in any fancy technical indicator on your chart. And the checkpoint always ends with this brutal honesty check. If after 10 trades you are flat or losing, the journal instructs you to reduce your position size immediately. It might even mean scaling all the way back to paper trading. And listen, this isn't a punishment for failing. It's a calculated survival tactic to make sure you simply stay in the game long enough to figure things out. And finally, Section 6, the 100-trade transformation. We've finally reached the ultimate life cycle stage of this methodology. If you've pushed through the discipline gates and you've done the 10-trade checkpoints, you're about to see a complete, high-level picture of your journey to mastery. Plan, execute, review, improve, repeat. That is the heartbeat of a professional trader. And over the course of 100 trades, this loop stops being a chore and literally becomes muscle memory. This is exactly how you build the habits that create long-term results. After a full 100 trades, you fill out a final performance summary. It looks at your total net P&L after all those charges. It averages out your 10 discipline checkpoint scores. It absolutely forces you to stare right at your biggest single loss and your longest losing streak. And what this does is give you a complete, undeniable, strictly mathematical record of your behavior, your mistakes, and your overall growth over time. You simply can't lie to this data. Which leads us to this incredible reality check from the end of the journal. Protecting capital is trading skill. We so often think that skill is finding that magical 10x breakout stock, right? But it's not. Real skill is knowing exactly when to cut your size in half. Skill is skipping the trade entirely when the discipline gate isn't perfectly met. Managing risk is the actual job. So I'm going to leave you with this final provocative thought to chew on. If you were to start this highly structured process today, after logging your next 100 trades, what will your verdict be? Will the data show a true transformation into professional consistency, or is it going to reflect terminal gambling? The choice and the discipline to make it happen is entirely up to you. Thanks so much for joining me on this explainer, and I'll catch you in the next one.